Gold has exploded, melting resistance levels, and has set new record highs for 7 consecutive days. In the past week, it has gained about 6%. In the meantime, markets are seeing bouts of profit taking following every new lifetime high recorded. This investor behavior pattern will likely continue amid a dovish Fed and the US China trade war risks. I'm Dhwani Mehta from FXStreet, and I shall analyze the historic rally in gold for you in this video. As it keeps setting record highs, gold continues to display a buy-on-pullbacks pattern with a healthy support now seen around 4,129 levels, which is the 23.6% Fibonacci retracement on the daily chart. I'll break down the technical analysis for you in the video ahead. The main event risks this week are the US-China trade talks and the US Consumer Price Index data. While there is hope that the US government could reopen towards the end of the week, the US Consumer Price Index data for September will be released on Friday. Hotter than expected inflation readings could pour cold water on expectations of another interest rate cut by the Fed in December following the expected October rate cut. This dovish expectations would lift the US dollar at the expense of the non-yielding bullion. On the US-China trade front, US Treasury Secretary Bessent said that he would be meeting with Chinese Vice Premier Lifeng in Malaysia this week, while Trump confirmed his meeting with Chinese President Xi Jinping in South Korea next week. So these US-China trade discussions will be closely monitored, which will help shape up the whole market. Any signs of easing in US-China trade tensions could trigger a steep correction in gold. On the other hand, an escalation could propel the gold's record-setting rally further as the FOMO continues to drive investor sentiment. As observed on the daily chart, gold witnessed a steep correction of over 5% on Tuesday, which was its biggest daily drop since 2013. In doing so, gold tested the critical 23.6% Fibonacci retracement level at $4,129. The Fibonacci retracement is of the parabolic rise which began back in mid-August. Now, early Wednesday, gold extended the sell-off and dropped over $100 in a matter of hours to test the $4,000 region. Now this area is a powerful support as the 38.2% Fibonacci retracement also aligns and coincides with the 21-day simple moving average. Buyers quickly found fresh demand in this region and attempted a comeback to regain the $23.6% Fibonacci retracement. However, daily candlestick closing above this level is required to revive the record rally. To the upside, a strong resistance is seen around the $4,380 to $4,400 mark, above which the round levels of $4,500 and $4,600 will come into play. On the other hand, if the correction regains traction, we could see a sustained break of the $4,000 support area, below which a fresh downtrend will be initiated. Buyers, however, could find some temporary comfort near the 38.2% Fibonacci retracement level, which is located at $3,847 levels, and a failure to defend this level will expose the crucial support, which is the line in the sand for buyers at $3,725 levels. This area is the intersection of the 50-day simple moving average and the 61.8% Fibonacci retracement level, which is known as a golden ratio and a tipping point for trend reversals. So overall, gold remains a buy-on-pullback trade, and this is also justified by the 14-day relative strength index, which holds comfortably within the bullish territory, currently near 60 levels. Gold risks sudden reversals if inflation and monetary policy expectations shift. However, bargain hunters are expected to dive in if the US-China trade talks falter and dovish Fed bets persist, which will help preserve gold's bullish momentum. Now, if you want to stay up to speed on latest content on gold, macroeconomics, geopolitics, please do check out FXStreet's newsfeed. And if you like this video, don't forget to hit the share, like, and subscribe button. Thank you.